Hello, good morning, ladies and gentlemen. I welcome you to another promising live session as we take a technical dissection of the current market structure. And what we are simply going to be doing is what we have been doing before now, where we evaluate the financial market using technical parameters to identify trading opportunities. So we have a series of financial instruments that we have been monitoring since the beginning of the week, and we are going to be looking at how well these pairs and commodities have been doing so far, so that we can anticipate or make a decision based on the current market structure ahead of both the UK and the New York session today. So once again, I welcome you all on board, and I'm glad to have you guys around. So as usual, what we are going to be doing this morning is to keep tabs with the economic calendar. And if we look at the economic calendar this morning, if obviously we are going to be focusing on the pairs that we have been monitoring since the beginning of the week. And looking at the economic calendar here, we do not have any high impact macroeconomic event that is affecting any of the pairs and commodities that we have been monitoring since the beginning of the week. But from the US economic dossier, we still have a feature of the weekly initial jobless claims and the challenger job cuts data, which is coming up today. These are medium impact event, but not really what I'm always looking forward to, and it could have a level of impact in the market, as majority will be looking forward to this event too as well. And we're beginning to see some traction in the dollar, as in some couple of pairs I was able to cite reversal patterns in this, but we are not yet sure if this reversal pattern will become valid. But these are the things we are going to be looking at today to take a position ahead of the London and the New York session today. But the almighty one is the non-farm payroll, which is coming up tomorrow, and obviously we shall be seeing some anticipation reflect on the chart as price action today, and we shall be using this and taking this into consideration while we make a decision for today as well. So once again, I welcome you all on board, and let's dive into the market structure to decipher what our next line of action will be. So as usual, what we are going to be looking at this morning is the first one is going to be the US oil as usual, and we are going to be looking at what has been happening so far on the US oil in the last 3 to 4 days now. And one thing for sure you would have noticed here is that price action has been quite choppy, at least since the beginning of the week, as we saw how price continued to range between the $81.50 level and the is it the 79 or $80 area here, where price has been consolidating, as we can sense that participants are not yet sure if price will continue to the upside, or we are going to be seeing a form of retracement before that bullish momentum will finally happen. And following the OPEC Plus decision during the course of the weekend to cut oil production, the expectation in the market has been so massive, in the sense that everyone is expecting a huge hike in oil prices. But what we have been seeing so far has not reflected that expectation at all. And one of the reasons why this is happening is probably because of the US attempts to ensure that the oil market price is stabilized by injecting more oil production into the oil market. And this has done a lot of impact in that regard, as we can see here that we really have not seen any yield traction in this market. So now that we have this information, looking at the chart here, what is going to be our plans for today, and how do we intend to take advantage of any trading opportunity? Well, before we go into the details on that one, let's look at how the week started here so that we can have a background knowledge of what we've been looking at, and then decide what to look forward to this for today. So looking at the structure we have here on the 1 hour time frame, the first thing we observed at the beginning of the week was the fact that the week opened after a huge bullish gap, which dovetailed to about 48 pips bullish gap there, which you can see was illustrated with this yellow rectangle box here. Then following that huge gap, we saw how price action consolidated between the $80.50 level and the $79 area. And in fact, since Monday, we can see that price is still ranging within that identified phase that we had there. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the channel to the upside for buying opportunity, or breakdown of the channel for selling opportunity. And I think during the New York session on Monday, we saw our price action broke out of that structure to the upside, triggering our buy position. And then we had price action moved about 50 pips thereabout, but we saw this engulfing candle here on Tuesday, which took us out of our position, had a worst case scenario of break even. And since then, we have been seeing the situation where price has been consolidating between the $81.25 level and the $80.50 area. And one thing we said here yesterday is that we are going to take a closer look at the structure, continuing to monitor this, as our center of focus will definitely be around that $81.25 level and the $80.50 area. And what we agreed here yesterday is that we are going to be having a buy stop order above the $81.25 level, with the hopes that price action will break out of that structure to incite a bullish momentum. But as you can see here, price did not even get anywhere close to the resistance line we identified at the $81.25 level, and instead price action has been finding lower lows and lower highs in this market, hereby breaking down the $80.50 level to trigger our sell stop order. And since then, price action has been trading below the $80.50 level with sharp selling pressure, bringing price to the downside from that area. And if you had joined this move, you will currently be running with about 60 pips thereabout in profit at this particular point in time, as sellers and buyers continue to struggle just around this area. So now that we are going into the new week, what is our expectation based on this current market structure? Will the sell pressure continue, or we might see price action climb to the upside? And if a sell pressure continues in this market, what do we want to be seeing that will give us the confidence to remain in that sell position? And what we are going to be seeing if we are going to be buying the US oil is what we are going to be talking about right now. So the first thing I will say right here is to move your stop loss to your entry point to secure this current position, as you would have noticed that in the last 3 days in this market, the area around the $79.60 or 70-cent area has been a strong buying niche, as even though we have been witnessing lower highs in this market, we can see that as soon as price gets into the structure, we have been witnessing buy pressure around that area, which further emphasizes that buyers are still present in this market. So what we are going to be doing right now is to acknowledge that level, as we shall be using it as a yardstick for trading activity for today. So I would like to map that out here. So we have it's falling around the 79.75 level, I guess, or the 79.80 level. Okay, let me draw this out here, and we have something like this, 79.80 level. Let's map this out here, and then I place it at the bottom right hand side of the screen. And okay, here we go. Let's see if we are going to be doing some readjustment. Okay, I think it fits perfectly well with that structure there. So we have the $79.80 level again coming in today that we are going to be using to guide any potential trading opportunity. And how do we intend to use the structure? Well, for me at this particular point in time, I will be suggesting that a breakdown retest of that $79.80 level will be welcoming a sell position in this market. So I want to see price action break down the structure, then we scale down to a lower time frame to look forward to a retest of this level to give us a confirmation that sellers are very likely in this market. And if I start seeing retest of structure, which has not even happened at all in the last 3 days here, that will likely be a signal that we are good to sell the US oil at this point, and a further breakdown of the $79 area will be welcoming additional position in that regard. So the sell momentum here, the potential sell momentum here, has a tendency of giving us multiple entries, so we want to be on standby to catch these opportunities as we continue to monitor price action. Now, with the structure we have here, if we zoom out a little bit here, you would have noticed that since price action tested that area around the $80.50 level and the $81.25 area, we have been seeing sharp rejection from the sellers around that area, as buyers are not actually gaining that momentum to push price to the upside from that area, now giving us a structure that looks more like a reversal pattern, with the neckline of that reversal pattern falling just exactly around that $79.80 level that we just identified now. And if a breakdown of the $79.80 level finally happens, I would see this as a valid reversal pattern, which will trigger the inception of a retracement of that previous impulse leg. And I think I laid emphasis on this impulsive move prior to this live session, that if you look at the structure here, a retracement phase seems long overdue in this market, as participants who took advantage of that bullish momentum last week will at one point in time want to be doing some profit taking activity, which will reflect on the chart in the form of a retracement into structure before the anticipation of another wave of bullish momentum will happen. So I'm of the opinion that if the breakdown of the $79.80 level happens, we might be in for that retracement, which needs some momentum for the buyers to actually be able to break out of that $80 barrier during the later part of the week. So let's see how this is going to be playing out. So for today, I'm looking towards a counter trend opportunity, which is on the bearish side. So we are looking forward to that breakdown of the $79.80 level, retest of that structure for confirmation, then we could join that bearish move to the downside. And where will our TP target be? Well, one of the structures where the TP target could be at this point, the first one is the first of all, the $79 level. We have a structure there. We have a structure at the $78 area, and we also have a structure here at the $76 level. So these are areas where we could have TP target, but what I normally do in this kind of situation is to extend my TP as wide as possible. Then one thing I do here is to set an alert that whenever price action gets into this level, I'm notified. Once I'm notified, I move into the chart, look at the structure, move my stop loss to secure my current position, then monitor how price action reacts to that level to determine if we are going to be adding more position to our existing trade or getting ready to join a second wave of the bullish momentum. So what I'm trying to say here is that as soon as price gets into the $79 level, I want to be moving my stop loss, secure the current position, monitor price action around the $79 level. A breakdown of that structure will be welcoming another selling opportunity, and as soon as price gets into the $78 area, we move our stop loss again to secure that position, monitor price action around that area, and depending on how price action reacts to that level will now determine if we are going to be adding more sell position or getting ready to join another wave of bullish momentum. So this is how I would want to be monitoring this, but be rest assured that I will be with you in the comment section on my TradingView platform to give you an update on what I think would happen as soon as price gets into the structure. So let's be on standby to be part of this move as we ride the move all the way to the downside. Now, there is another thing I would like to say here, which is something I normally do, and that is to keep an open mind where we also take into consideration the potentials of the buyers in this particular market. And if buyers are going to be coming in here, what do we want to see in this market that will give us the confidence to open a buy position? Now, if you look at the structure here and look at what has been happening in the last 48 hours, you would have observed that price action has been finding lower highs in this market. And in order to emphasize the strength of the sellers here, I was able to connect the series of lower highs here, which has given us this resultant bearish trend line. And one thing I want to see here that will negate any bearish buyers in this market is for price action to break out of that trend line to the upside. And then if this happens, then we want to be thinking of a momentum shift gradually coming in. But remember that in this kind of scenario, we are not going to be getting too excited, as we still need some confirmation to happen to give us that confidence to be able to be part of that bullish move. So once the breakout of that structure happens, price action takes us out of our sell position, of course, and then we want to see a retest of the structure happen. That is, price action comes back to retest the $80.50 level, which also shares a confluence with that trend line there. And one thing we want to be seeing when we scale down to our lower time frame is a retest of structure. By pressure resume above this level, then we can actually feel comfortable joining a bullish momentum at that point. So this is the only scenario we want to be seeing here that will make us be part of any bullish momentum in this market. So that is my view here on the US oil. So I will be with you in the comment section to give you an update if there is anything strange come up at any point in time. If you do have any question, feel free to drop your enquiries in the comment section. So I will be moving on to the next pair, and the next pair we are going to be looking at this morning is the GBPUSD. Now on the GBPUSD, what has really been going on this chart since the beginning of the week? Obviously it has been quite bullish on this chart, and we were actually very slow to catch up with that bullish momentum, as we were expecting a bearish momentum at the beginning of the week, and this was as a result of this bearish trend line we identified at the beginning of the week, and the fact that price action broke down that bullish trend line, which also shares a confluence with that 1.23500 level, a level which I emphasized in my video on the GBPUSD. If you had not watched it, you can check it in the description box of this current video. So these were the structures that I was seeing at the beginning of the week that was giving me a clue that a selling momentum would happen. And coupled with the fact that price action started on a bearish note at the beginning of the week, this was another signal that I was seeing that made me think that sellers might likely come in. Another thing that also buttresses that bearish signal at the beginning of the week was the structure here at the 1.24200 level, which has been a strong selling niche in this market. So these were things that I saw at the beginning of the week that made me to think that sellers and buyers don't have a chance in this market. But unfortunately, we saw our price action continue to the upside, breaking out of that resistance line here, climbing back above the structure, breaking out of this bearish trend line, and at this point I knew a bullish momentum is likely coming in. And one thing I stated there on Tuesday morning was that we are going to be anticipating a bullish momentum if the breakout of the resistance line of the structure happens, and with a buy stop order above that level, we had a buy position triggered at that point. And from that point on, we had price action move about 100 pips thereabout before the sell pressure resumed in this market. And I told us all here on Tuesday, I guess on Wednesday morning, that was yesterday, that we should ensure that we move our stop loss accordingly, as we have cited our price action has been ranging between the 1.25200 level and the 1.24700 area. And one thing we decided yesterday is that a breakdown of the 1.24700 level, which happens to be the support line of this flat channel here, will be an opportunity for us to sell. And you all know what we look out for whenever we have this kind of flat channel. We either see a breakout to the upside for buying opportunity, or a breakdown to the downside for selling opportunity. And as you can see here, since the breakdown of the structure has happened, we have been witnessing selling pressure right below that structure. And I shared this on my public platform yesterday that we are going to be selling right below that structure, and if a further breakdown of this bullish trend line happens, then this will give us a confirmation that sellers are actually strong in this market. So for the sake of clarity here, let's look at what the publication says here on the TradingView platform, where I gave an update in that regard. So let's run through that. So yesterday is on the 5th of April. So this is my TradingView platform, and these are the commentaries I share in the comment section of every video. So this was the consolidation phase prior to the morning live session yesterday, and I told us all to be on standby that price action is about to break down the 1.24700 level, and we saw the breakdown of that structure happen. I told us all to secure our sell position here, and we had price action take us out of this position. So this morning here, I shared this update. This morning I said price action takes out the sell position as buy pressure resumes. Let's hold on and see how price action reacts to the 1.24700 level for the next line of action. So we are going to be, our center of focus for today is going to be around the 1.24700 level, where we want to see how price action reacts to the structure to now determine if we are going to be buying or selling the GBPUSD today. And another thing here is, despite the fact that price has broken down that support line here, we should also take into consideration this bullish trend line that has been supporting this momentum in the last couple of weeks here. Remember, we had the bullish trend line figured out here. So this bullish trend line has been holding this momentum for quite a while now, making it a very strong one, where a breakdown of that trend line might likely incite a strong bearish move to the downside. And if we are anticipating the non-farm payroll tomorrow, there is a likelihood that the dollar may rise a little bit into tomorrow, and then probably after the NFP we could see profit taking active people making money off the dollar they've bought 24 hours ago, which is today, and make some money off it. So these are things, are tentative ideas that I'm looking forward to at this point. Now we are going to be taking into consideration this bullish trend line and the 1.24700 level to decide what our next line of action will be for today. Now, how do we do this? Well, let's zoom into the current structure. And one thing we are going to be doing here is to acknowledge what was going on within this channel here. And if you look at this closely, you will see how price action has been finding lower highs within the channel before it finally broke down that channel here during the New York session yesterday. And the next thing we are definitely going to be doing here is to connect the series of lower highs. So we want to acknowledge the bearish momentum. So we connect the series of lower highs here, and we should be having something like this. So coupled with the 1.24700 level, we are going to be using this bearish trend line to guide our trading activity for today. And what this simply means is that if price action continues to trade below the bearish trend line, we shall feel comfortable in our sell position in this market. But a breakout of the trend line to the upside will be a signal that buyers are likely coming in, hereby respecting that bullish trend line one more time. So with the structure identified here, let's see if we're going to have some readjustment. Okay, so we do have some readjustment to make after bringing back our candle chart. So we have something like this to play with. So with this information here, anywhere below the 1.24700 level seems most appropriate to sell the JPUSD at this point. And if we consider what happened during the last candle here, you look at the nature of this last candle, you can see that it closed in the form of a shooting star candle, which from a technical standpoint is a beautiful sign that giving us a clue into the presence of the sellers at this particular juncture in this market. So we want to continue to see sell pressure continue from this area to the downside to feel comfortable in our sell position. And we also have a structure here at the 1.24200 level, where a breakdown of that structure as well will welcome additional position in this market. So I hope that we'll be on standby to catch this move. And one thing I also want to state here is that sellers are looking very, very strong within this area. And look at the candles here along the bearish trend. Now you can see sharp rejections of the structure as price action continue to find lower highs here, further confirming the strength of the sellers in this market. So anywhere below the 1.24700 level at this point seems most appropriate to sell at this point. Then our stop loss should be somewhere close to the resistance line here, which will be dovetailing to about 40 to 45 pips thereabout, depending on your your portfolio size rather. So that is that on this one. Then another thing I would like to also acknowledge on the structure here, I want to see if we could have the privilege of having more position. So when we look at the structure closely, we have another key level here at the 1.244900 level, which let's acknowledge this. We have 1.24900 level here, and I will just do some readjustment after bringing back the candle chart. So we have something like this. Okay, so we can still look forward to a breakdown retest of the structure too as well, to add more position to our existing trade. So we hold on to a bearish bias here in this market. And like I always say here, we also want to keep tabs with the opposite direction too as well. So for buying opportunity to happen in this market, then that means price will take us out of the sell position, leading to price action climbing above the bullish trend line here. And then a retest of structure will give us a confirmation that buyers are good to go here. So you can see how the 1.24700 level and that bearish trend line will be serving as our yardstick for trading activity today. So let's keep this in mind. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. And also I will be with you in the comment section on my TradingView platform to give you updates on what my thought process are after citing any change in momentum in this market. So that is that on the JPUSD. If you have any questions, let me know in the comment section. So moving on to the gold, that is the XAUUSD. And what has been happening here on the gold in the last 1 week, we have been quite profitable on the gold. The gold has been our most profitable instrument for this week, as we were able to scoop this move all the way after price action broke out of the 1,982 here on Tuesday. So how did it go started for us this week? So we saw this. Okay, let me delete some structures here as so that we can have a clean chart, I guess. So let's delete some structures here and just emphasize on what we'll be using to guide our trading activity for today. So I think it's a little bit cleaner right now, right? Okay, so this was where price action started this week. It actually started on a bearish note. We saw bearish momentum began at the 1,971, which gave us a clue that we might be seeing selling pressure. So this was why it took us a while before we joined that bullish momentum, but fortunately for us, we were able to scoop a significant amount of pips from this structure. Now we saw the the support zone are between the 1950 and the 1957, and it was upon this platform that bullish momentum began. And I told you on Tuesday that the reason why I wouldn't be selling was simply because of this bearish trend line. Sorry, wouldn't be buying is because of this bearish trend line, as we need the bearish trend line to be broken to the upside. If you watch my video on the XAUUSD, you would remember that we identified a pennant channel on the 4 hours time frame. Let me bring that up so that you can see what I'm talking about here. So you can see we identified the pennant channel here, and obviously you know a pennant channel has a tendency of transitioning into either a trend continuation pattern or a reversal pattern. So we were actually looking forward to selling opportunities at the beginning of the week when price action broke down the support line here, and so we wanted to see a retest of structure, which never happened, and price action continued to climb to the upside. And in that kind of scenario, a breakout of that resistant line of that pennant will definitely be the trend continuation pattern that this structure has transitioned into. And on the 1 hour time frame, we saw how we anticipated that bullish momentum. Remember, as soon as price tested the 1900 here, we saw a retracement into the 1978, and here on Tuesday we saw this structure at the beginning of the morning session on Tuesday, where we saw our price action was consolidating just between the 1982 and the 1978. And you all know what we look out for whenever we cite this simple pattern. All we want to do is to place our buy stop and sell stop at both ends so that we can capture that move when it happens. So with a buy stop order above the 1982, we had our buy stop order triggered. And remember, I told us all that we should be having a buy stop order above the 1990, where a breakout of the structure will definitely has taken out all the sell position there to give us another opportunity. So we had two positions running here on Tuesday, and we were able to scoop over 400 pips on each occasion in this market. So for everyone who has been part of this one, well done to us, as we are still very profitable on the XAUUSD for this week. Now, with the look of things right now, things are becoming a little bit complicated around this area. As you can see, as soon as price tested the $2,025 level, we begin to see price action go into a consolidation phase. And with the situation we had here, we had the supply, we had a support line around the 2050. Let me extend this out a little bit so that we can see this clearly. Hold on a second. So we extend this out a little bit. So this was the structure we actually identified yesterday, and we said either the breakout or breakdown of that structure will welcome trading opportunity. And we saw the breakout of that structure actually happen yesterday, and price action moved about, I think, about 50 pips thereabout, and we moved 75 pips thereabout. We moved our stop loss to secure the position, and a couple of hours after we were shaking out of that position, had a worst case scenario of break even. It now depends on where you placed your stop loss that will now determine where you are taking out from this area, but the worst case scenario would have been at break even at this point. Then another thing we noticed yesterday within the structure is this bullish trend line that we identified here, and I told us all that this trend line will be our guide for yesterday's trading session. And what that simply means was that if price action remains above the bullish trend line, we will feel comfortable in that buy position, but a breakdown of that trend line will welcome selling opportunity. And I think we had a sell position triggered yesterday. Hold on a second, let's run through the updates I shared on my public platform. So this is my TradingView platform, and let's look at the commentary for yesterday on this commodity. So this was the bullish momentum we enjoyed at the, okay, this was a couple of days ago when we anticipated that bullish move to the upside here, and that is it. We had our TP target 8, and we had the structure identified, price action, then we had the breakout of structure, secure buy position, and then we were taken out of our position. As I stated here, that price action takes out the buy position as selling pressure resumes. So I identified the $2,020 level as an area to actually sell. So we had our sell position triggered, price action move for about 20-30 pips before we were taken out of that position at break even. Then I stated here that if price climbs above the 2025, we will be anticipating a buy position here. And as at this morning, I said secure your sell position as we had price action break down the 2020, move to the downside here. And I hope you actually moved your stop loss accordingly to secure that position. Let me bring out the chart I shared on my public platform here. Okay. So I think this is it right here. Okay, yes, this is it. So at this point, I want you to move your stop loss to secure this current sell position as we continue to monitor price action. So what are we going to be looking forward to today on this one? And I want to try to make things a little bit simpler for us to be able to feel comfortable in whatever position we are in. Now look at the whole choppy situation we have here in the last 24-48 hours in this market. You can see that the initial channel that we identified between the $20.25 and the $20.50 level has actually widened more, and we are going to be acknowledging this by moving this resistance level and the support line to adjust to this current structure so that we can have a better perspective into this. And one more thing I would like to state here is that, remember, I made mention of this during our live session yesterday. I told us all that whenever price action hits a new high, there is a tendency for us to see some choppy situations around that area, because it will take some time for price action to acclimatize with that zone. This is the first time price will ever get to this peak during the course of this year, and most people in the market, it's a psychological thing that whenever you are within a territory you are not familiar with, there is a tendency for the emotion of fear to prevail. And if fear prevails, what do you see? You see people going out of their position by selling, and this will be reflected on the chart as bearish momentum. So we can see how price action has been very choppy around this area. So participants are still looking forward to something that will give them that confidence, that indicator that will give them that confidence to stay around this area. And one thing we are going to be doing here is to take a technical dissection of the structure. And like I said earlier, we are going to be extending the channel. So we are going to expand the resistance line to suit the current market structure here. So the highest point price has ever been this here is the $2,032 level. So let's acknowledge that one first of all. So we have the $2,032 level figured out here. So that is our new resistance line within this old structure that we have here. Then our support line is going to be somewhere around here at the $2,008 level. So we have about a $24 gap, a $24 range here. So $2,008 level is identified here. So what I will be doing right now is to delete this one. So we capture a very wide range right now. So we have a consolidation phase that is ranging within a 14, is it $24 area at this point. So now the next thing we are going to be doing, right, let me delete this one. Ensure you have moved your stop loss. For those who are still in the sell position, move your stop loss right now to your entry point to secure this current position, as we might likely be taken out of this one. And one thing I want us to take note of here is that as soon as price got into that area around the 2008 and the $2010 level, we have been seeing buy pressure resume around this area. So what I will be doing is to acknowledge this area as our new demand zone for the later part of this week. So as long as price remain above the structure, we shall be looking out for buying opportunity at this point. So hold on a second, let me label this. So I would like to place this right inside that box. So we have something like this. Then I'll normally give this a darker color. Now here we go. So we have a demand zone already figured out at this point. Now another thing I would like us to take note of here is this bearish momentum here. When we connect the series of lower highs, we have something like this. Is it this or this one? So I think I will have a couple of trend line here. So I have the first one here, and I'll make this one lighter. Then I have the second one here. I'll make this one thicker. So we have a couple of trend lines here that we shall be using. So it's looking a little bit bearish within this channel here. So let me bring back the candle chart. So we had a breakout of the trend line here. So it was sharp breakout, which might likely be a false breakout at this point. So price action has come back to continue to respect this trend line. So at this point in time, we want to see how price action will be reacting to this trend line to now decipher if this bullish momentum from that demand zone at the $2,008 level will remain valid going forward. And in order to be able to take advantage of any trading opportunity around that area, we need a key level that we shall be using to guide our trading activity around that area. So one thing I'll be looking at here is to focus on a level that has selling pressure in the past. So that is this area here, which is around the $2,021.50 level. Let me use $2,000.21. Okay, $2,000.21.50 level. So we have this mapped out. So I'll place at the top right hand side of my screen. Give it a dark color. So here we go. So ensure you have moved your stop loss to your entry point here. So we have a structure here. So you can see how this $2,021.50 level has been a strong selling niche. Sorry, it's strong determinant of price action in the past. It was a selling niche here on Wednesday morning. We saw the breakout of structure. We saw buy pressure here. Price action broke down the structure. We saw selling pressure again to the downside. And right now we want to see how price action will be reacting to that level, which also shares a confluence with that trend line we just identified here. So once price action gets into the structure, we either going to see selling pressure resume around that area, that is multiple rejection of the $2,021.50 level, where buyers find it difficult to break above that structure. At that point, we'll start looking out for selling opportunity. So if it now transitions into a reversal pattern, it could be a double top structure, head and shoulder pattern, then we want to be getting ready to sell. So let me give you a visual representation of what I'm talking about here. So if price action climbs to the upside and comes into the structure, and we see something like this, rejection, price comes in again, rejection, then price comes in again, rejection again, then this will have turned out to be a reversal pattern. Then we scale down to our lower time frame, look out for breakdown, retest of structure, then we could actually join that decline to the downside. And a further breakdown of the hold on a second, further breakdown of the $2,008 level will welcome more sell position in this market. However, if price action gets into that structure and it breaks out that level to the upside, and then we start seeing retest of structure in our lower time frame right above the structure, then I'm of the opinion that we are going to be having a breakout of the $2,032 level, as buyers will have probably be gaining some momentum to be strong enough to break out of that $2,032 level. So at this point in time, for the sell position we took yesterday, please move your stop loss to your entry point. And what we are going to be doing today is to monitor how price action will be reacting to the structure here in the next couple of hours. It could take about 2-3 hours for this to mature. So whatever happens around that area will now determine what our next line of action will be. So at this point in time, we need to be very, very patient. It could take about 2-3 hours before anything happen around this area. So you can as well set your price alert around the $2,021 zone, so that when price action gets into that structure, you will be alerted, and then we will monitor this together and see how we are going to be taking advantage of any trading opportunity around that area. So on the XAUUSD this morning, move your stop loss on your existing sell position to secure the current position, and then we remain patient to see how price action reacts to the structure to decide what our next line of action will be. So that is that on the XAUUSD for today. If you have any questions, let me know in the comment section. So we shall be moving on to the last pair for today, which is the USDJPY. So on the USDJPY, like I told you earlier, we are beginning to see some bullish traction resume on the USDJPY. So far so good on the USDJPY. We have been quite profitable, and price has been dropping to the downside. So let's quickly run through how the week started for us on the USDJPY. So at the beginning of the week, we saw we identified this channel between the 133.400 level, as you can see here, and the support line sitting at the 132.4, is it 45850 level. That was a support line for this week. And you all know what we look out for whenever we have this kind of channel. We want to see price action either breakout or breakdown of the channel for trading opportunity. Now on Monday morning, we saw the breakout of the structure prior to our morning live session, and I told us during our morning live session that we are going to be seeing how price will react to the 133.400 level. If we start seeing buy pressure or retest of structure, then we want to be joining that rally to the upside. But if price action breaks down that structure, retest it on our lower time frame, we want to be selling. And it was at this point we had our sell position triggered here at the beginning of the week, and we continue to ride the move all the way to the downside. We added more position at the breakdown of the 132.850. Then we saw another rejection here where we had our sell stop order below the 132.500 level here on Tuesday, and since then we have been riding this move all the way to the downside. So we have been quite profitable on the USDJPY so far this week. But there is something interesting that happened here during the early hours of today, which I would like to share with you, and shall be the basis upon which we shall be trading the USDJPY for today. And this was duly shared on my public platform this morning. So as at yesterday, okay, can we quickly run through what happened, how the commentary for the USDJPY went by yesterday, so before we go into what our expectations will look like for today. So on the USDJPY publication on my TradingView platform, so we had I think, okay, no, not here. So we had a sell position triggered. We enjoyed the move all the way to the, okay, this was something that happened after, I think, okay, after our morning live session yesterday. This was what we identified during our live session yesterday. We identified a channel between the 131.800 and the 131.400, and obviously a channel following an impulsive move to the downside is very likely to transition into a trend continuation pattern where the breakdown of the 131.400 level will be welcoming more selling opportunities in this market. So we saw the situation here, and we had our sell stop triggered at this point, and I told us all immediately after citing the buy pressure here that we should manually close the sell position at a loss and set a re-entry as sell stop order due to the sharp rejection of the support line at the 131.400. So the current buy position has a tendency to break out and retest the 131.800. So I told us all here that we should manually close our position because of the sharp rejection I saw here, and set another sell stop order below the 131.400 level to see if price will continue to the downside there. And look at what happened. Price action finally came back, so we were able to scoop the loss we made earlier on the USDJPY as price action moved about, I think, about 70-80 pips thereabout before this buy pressure resumed in this market. And this morning, this was what I identified here this morning, which we are going to be looking at today in anticipation of the New York and the UK session. So I said here that price action takes out the sell positions with a small profit, but the appearance of a double bottom pattern is a suspect that bullish momentum might likely come in at any time soon. So we need some further confirmation to be sure of the next line of action. So right now we are back at that structure here, and this is what I was talking about on the commentary there on my public platform. So if we look at the sell pressure that started this week here, you can see how it was so massive that price action dropped significantly well, And as soon as price got into that 130.600 level, we started seeing some buy pressure resume around that area, hereby transitioning into something that looks more like a reversal pattern here. So look at the first touch here. Price was unable to break down the previous low, and at this point we have a higher low. And you know, from a technical standpoint, whenever we have a higher low like this, it is a beautiful sign that buyers are gradually gaining momentum at this particular point in time. And if you look at the structure, look at the pattern that price action has evolved into here, you will see that it's looking more like a double bottom structure, which from a technical standpoint is a very strong reversal pattern. And whenever we identify a reversal pattern like this, you all know what we look out for next. We want to identify a neckline which we shall be using as a platform upon which the reversal pattern will begin. And at this point in time, a breakout of the neckline will be making that reversal pattern a valid one. So we have a neckline which also shares a beautiful confluence with that support line of that flat channel we identified earlier. Remember, let me show you one more time. So this is the flat channel here we identified yesterday, which was broken to the downside. Now that support line now has now turned out to be a potential neckline that we are going to be looking forward to taking advantage of a bullish momentum from this area. So what this simply means now is this. Let me bring this right here. So we are going to be looking out for buying opportunity above the neckline of this reversal pattern. So it's not until price action breaks out of this neckline that this reversal pattern will now become a valid one. So this is what we are going to be looking forward to today based on this current market structure. And to further make things a little bit easy for the eyes to be able to identify this opportunity and at the same time feel comfortable whenever we are in that position, is this bearish trend line. So when I bring out my line chart here and we connect the series of lower highs, hold on a second, let me do some readjustment here. So we have the lower high. Hold on a second, please. Hold on a second. All right. I'm trying to make sure we have a perfect connecting the lower highs at the right spot. Okay, so we have a bearish trend line here, which buttresses the bearish momentum here. So when we do some readjustment, we should be having something like this. So we have a bearish trend line here, and look at how it shares a beautiful confluence with that neckline at the 131.400 level. So what we are looking out for today is a breakout of the neckline, which will definitely break out of that bearish trend line. And at this point, we have a signal that the trend line is no longer strong enough to hold that bearish momentum. And when this happens, this is a beautiful signal for us to be part of a bullish momentum in this market. So once that happens, we scale down to our lower time frame. We look out for retest of structure, buying pressure above this structure. Then we are good to be part of that bullish momentum to the upside. And a further breakout of the 131.800 level will definitely be welcoming additional position in that regard. So in the meantime, let's hold it like this, and I will be giving you an update as soon as anything strange happens or any new development comes up from this current structure. So on the USDJPY, I'm hoping that price action will continue to the upside here. So I'm holding on to a bullish bias, and if the opposite happens, then we will be getting ready to be part of it. Now, to make it more, I don't think we have a mature bullish trend line yet with the line chart, so we can only use the candle chart here to identify a bullish trend line. So we could actually keep tabs with this bullish trend line too as well, so that it will help us to feel comfortable in this bullish momentum. So if it goes like this, we might see some retest of structure, drop below this level, and then price continues to the upside. Then a breakout of the 131.800 will welcome more sell position in this market. So let's see how things go on the USDJPY for today. And if a breakdown of this trend line happens, then that is this bullish trend line happens, then we might be getting ready to sell the USDJPY in the form of a trend continuation to the downside. So these are my views here on the USDJPY. You can screenshot my screen and let's use it as a reference point when you're about to make your individual decision. So on this note, I want to call it a day here. It has been a wonderful moment with you guys, and I'm very sure you are well equipped with the informations we have shared here to take advantage of any potential trading opportunity during the London and the New York session today. And one thing I'll say here, I'm always with you in the comment section on my TradingView platform. If anything strange happens or any development comes in, I'm right there to give you an update in that regard. So on this note, I wish you best of luck, and I hope to see you same time tomorrow as we get prepared for the almighty macroeconomic event tomorrow, that is the non-farm payroll. Do have a wonderful evening, everyone. Bye bye.